Hey, I'm gonna get a tattoo of my whole body, just all over the whole body, but a little bit taller than me. No, I'm gonna get a whole tattoo of myself on my body, just a little bit taller. No? All right. Hey, welcome to the closing beat, everybody. How you doing today? Hope all is good out there. Happy Thursday to you. By the way, tonight, Wine and Wealth for clients can be a good one. We're going to go the general, the strategic, and the tax things that you should keep in mind when your child becomes an independent, because so many kids are graduating college right now or about to graduate high school, going off to college. What considerations should you have? And we'll go over, like I said, some of the general ones, the more geeky stuff, and of course the tax stuff to consider as well. That'll be at 8 o'clock tonight in the dojo for clients that want to come join us there. If you're brand new, come hang out with us a little bit. Just talk about some of the more advanced stuff with you. Last week, or we've got a bunch of great classes actually. Eric did a full review of the dojo and all the things that are going on in there. There may be an app in the works. I don't know. Just saying. We've done the Fed Now and the CBDC, the digital dollar that they're projecting to push out there. We covered that, all the details and legislation wrapped around that. So I hope you will check it out. There's all kinds of great stuff in there for clients to use there, and it's all archived. There's got to be like 200 videos, I'd imagine, at this point. Lots of geeky stuff in there. So also, if you want to play Guess the Dow, jazzwealth.com/Guess the Dow, $100 gift card if you're the closest to the Dow going over. We will find out tomorrow who the winner is, and considering that the Dow hasn't really moved, I'm curious how many people actually guessed for lack of movement. I don't think you know off the top of your head, but
a lot of great guesses. A lot of great guesses.
You're going great guesses. Okay. I'm just curious. That'd probably be something I maybe wouldn't have guessed, but you're welcome to play. No strings attached, and have at it there. That is totally cool with me. Now, inflation on manufacturers. That was kind of the discussion here today. Yesterday, we had inflation on the consumer price index. And today we had inflation on the producer, the people that make the stuff that we buy. And so inflation for them came in at 2.3%, which is, it's basically down to 2018, early 2019 levels. So they're fine, right? The inflation in the manufacturing space is actually really modest and back to where we would like to have it. A little bit higher still, but basically right where we need it to have. That means that the Fed rate hikes are essentially paused at this point. If they truly are going to be data-driven, which is what they say they're going to do, make our decisions based on data, well, if that's truly the case, we now have a 99.75% chance that the Fed rate hikes will pause in the upcoming June meeting, which is, I think a lot of people would say, that's awesome. It's just high enough where we have some decent money that we can make on savings. At least we're breaking even, right? So the difference between inflation and what you're getting in terms of a yield on your money market account or your savings account or something, it's basically right there. I mean, close enough for the moment. But it's also high enough to where it does slow things down a little bit, doesn't it? Has it not made you put off maybe buying something or just holding back for a little better deal or looking for some incentive, right? New car dealerships right now, incentive levels are high. People are slowing down. They don't just give that stuff away when cars are flying off the proverbial shelf. So kind of cool there. If we look over, that's the Dow. We don't want to look at that. Look over at the S&P 500. A lot of basically what we've been seeing all week, the main news aside from like Disney and some of the earnings that affect the Dow a little bit. A lot of the news that's come out has basically caused the market to get into that sleepy summertime mode, which normally we don't see until the end of the month. You know, the whole sell in May and go away thing. Well, part of that phrase is sell in May and go away. The go away part means the market gets quiet, right? Less range. So in other words, if we were to look at each day, we open up, trade down, market wiggles around a little bit. We do so in a little limited range. Whereas in January, for example, the range is wide so that we see more volatility throughout the day. Over the summer months, you tend to see these little quiet time things. That's why over the summer here on this show, we'll often do things like answer questions, play different games, a little bit of extra knowledge in terms of education while the market is quiet. So we're not just sitting back waiting for something to happen. We're kind of learning and playing offense so we can be ready. What will we do if the market goes higher? What will we do if it goes lower? Playing offense is oftentimes, as they say, your best defense. Thank you. Got you there. So anyways, as far as the markets go, we have this range, this is what we're looking at. And like I said before, nothing magical will happen until we get above this range or below it. And really, this week's been a great example. We've just, and then down a little, and then up a little. And I say it quietly and sleepy to give you that mindset of, oh man, it's so calming. That guy, man, his face is something else, but the voice, oh, it's nice and smooth. Well, as soon as we get above that, bam, now we take off. Now we can have some kind of excitement. We can have some, a little bit of risk, the risk on scenario that they mentioned on TV. Gives us a chance to believe that there's more of a profit, but for the moment we say, well, I don't know. And for the moment, the S&P is up 7.5% year to date. So that's not too shabby. Right? That's an acceptable level to take a break, rebuild, gain some energy, and maybe take off again at some point. But for the moment, a lot of quietness. If you look over at the NASDAQ, that one's actually trending nicely higher there, confirmed in an uptrend there, and sitting up 22% year to date. This is more than, obviously, 20% off the lows. We've got a new bull market here for the NASDAQ. And, you know, like we know from previous classes and stuff, it's driven by the big cap tech stocks, the super duper big guys, the trillion-dollar companies out there is what's really driving those things there. Now, it's been kind of nice to not have these bank issues be a bit of a focus. Remember, that's all we talked about for a while. We got away from that, talked about some Fed meeting stuff. We got some earnings in there. We got some inflation data. Well, all that's changed today. PacWest. If we look at that stock there, unfortunately, it's getting worse and worse for them. They are the latest to explore strategic alternatives. However, this is not a bankruptcy issue, if they're telling the truth. This is not a bankruptcy issue because the amount of liquid reserves that they have access to is 3 times more than the uninsured deposits that they have on record, which means if they truly have access to that money, then they may not be profitable for a while, but at least they won't go under. So they were very clear to say, hey, strategic alternatives does not mean fire sale. It does not mean bankruptcy. It doesn't mean knock on our door and offer us pennies on the dollar for our shares. That is just not going to be the case. Nonetheless, that has hurt some of the regional banks. You keep seeing that pressure, right? Here's the regional bank ETF, the KRE. I mean, it's just nasty, right? You almost want to feel like there's a bottom here because that was a nice reversal the other day, but man, with you know, the kind of chaos that PacWest will put out there, it makes people think, believe, act that their bank may be not as strong. So that part kind of sucks there. But keep in mind that this is a different scenario. I don't believe this is the same, again, if they're telling the truth and those liquidity providers don't dry up in the face of, you know, the troubles that they're having. All right. As far as the S&P goes, well, you know, it's it. We're just still waiting on that there. Some notable names here today that made some different types of moves. You got Amazon almost. Did it touch it? Looked like it touched new highs there for a moment, but a nice little uptrend waking up after being at one point a laggard in the market. Remember, we had seen the market start to rally and Amazon didn't play along. Well, that's starting to change course there. I'll point out Alibaba coming up off the bottoms there just a little bit, still stuck under the 200-day, but is this the rally that you get excited about? Seen a couple fake ones here. Carl Icahn, the IEP. This is a tough one, man. Is this fraud? That's what they're insinuating out there. Regulators now looking into IEP, and unfortunately back down today. Not as bad as it was, though. Peloton. We covered this one the other day. This one breaks down to new lows. They have some issues. Again, more recalls and issues there. And if we look at Sonos, that's down all outright collapse. 23% in one day. Imagine if the market did that. That wouldn't be good, right? So 23% all in one day here for them. The trouble is, if you look at you know who they are, Sonos, right? You maybe have one of their speakers and stuff, but we got a 1% profit margin. Okay, so historically, we have 1% profit margin there. They make like $19 million, $2 billion market cap or something crazy like that. If they come out and they say, yeah, things aren't looking like too horrible for us, but they are in the future, right? We see the future there. Our earnings are not great now, and we're just going to go ahead and slice all of our expectations for the rest of the year and chalk it up to a tough year. Well, if you have a 10% profit margin, you can get away with a little bit of that. 20% profit margin, you get away with a little bit more. When you have a 1% profit margin, that's your reason. That's the reason the stock's troubled so much today. You could read headlines and come up with all that. But when a company has to scale back or they think that their sales will pull back, I should say, and you're only making 1%, it makes it really, really difficult there. So that's the big problem going on with them, unfortunately. If we look at rates, moving back higher here, this is the Jello on the plate asset class right now. Just, it's good. Oh, it's bad. Oh, it's good again. It's bad again. Right? So bonds themselves have calmed down. Remember last year, there were so many moments in time where the bond market was falling with the stock market. That is not normal. Last year was one of only 4 years where both the bond market and the stock market fell together. That doesn't normally happen. So congratulations, first of all, if you weathered that storm. But now you go, well, are we bouncing? Well, if we bounce, then that means rates have to go down. That's probably not going to happen anytime soon. And so what you have is a recipe for people that look at this over the last couple months and go, is the Fed right or is it not? Is the debt ceiling thing going to be an issue or is it not? Looks like it's going to be. So in the meantime, do you get new money? Do new people decide to buy bonds? Well, why would I when I can go put my money safely in a money market account? Weird kind of time that we're going through with that right now. So just something you may want to look at and consider. Disney. It was a rough day for Disney. You don't, well, I can't say that recently, but you don't often see Disney just, hey, we're going to be down 9% today. That's just how it's going to go. That's a little bit rough there. If you look at Disney's earnings, it was a little bit weaker on overall earnings there. And the focus was on their subscriber counts. So Disney Plus, ESPN, Hulu, their live TV there, not really good. When you look deeper into it, though, you go, okay, it's actually not too bad, and that's probably why analysts keep their targets as high as they do. You're at like 130 for some of them. JP Morgan's like 135 or something. Why would they do that? Average revenue per user. Remember, that's what we care about. When we look at Netflix's number of subscribers, okay, well, that's a little more cut and dry than Disney is, but when we look at that, so did your subscribers go down? Well, if they went down a little bit, that's okay. It's not going to help the stock, but that's okay, as long as your revenue per user is strong or getting stronger. Revenue per user here in the States, $7.14. That's a 20% beat. That's why analysts don't lower their target down to $90 or something crazy like that, because that average revenue per user is climbing up. They're spending slightly less to make the content or provide the content than they used to, which means that they can make more money per subscription, right? It's a tough business to be in, but they're doing it. Globally, average revenue per user up 4.44%. Okay, that's an improvement too. So that's, if you're looking around, you go, why wasn't Disney just downgraded like crazy here? Well, that's one reason for it. The other reason is overseas, Shanghai, Paris, Hong Kong, attendance in the parks. So this is no small chunk of their business. Attendance in the parks up 100% minimum when you look at the various parks there. So triple digits for each one of those parks. It's been coming back up little by little there, but that's pretty interesting. Now, the trouble, again, with that, you can't say, oh, well, that's awesome, they're making more money. Not technically, because their costs are still rather high. So you may be sort of complaining about buying a pin that's $45. Well, their costs are higher too. Not that high, I'll give you that. But still, that's what's going on there with Disney. And a little bit of a problem here in the short term, but that's why you don't see analysts just bailing out. Robinhood. Oh, good job. They're up 6% today. Here's an example of making more money off less people. So monthly active users, less. That's normally not a good sign, right? Because Robinhood needs that order flow. They don't make money unless you press that little button on your cell phone. Well, for the most part, they don't make money unless you're buying and selling and buying and selling. So monthly active users, buying and selling and buying and selling, less. Okay, so that's the elementary way to say it there. But the revenue per user, more. Okay, that's awesome. Picture yourself in your business. You sell widgets or you offer a service. If you could have less people but paying more, it's the common CPA problem. They can't have too many clients and do their taxes. They just physically not enough time. So if they have less people and they're willing to pay more, a CPA is happy with that all day long. Would you rather have 10 people and do their taxes and they pay you $1,000? Or would you rather have 100 people and they pay you $10 or something really insignificant? Of course. So Robinhood's done a good job of that. They're learning how to make more money off of potentially less action, not necessarily less people, but less action. And as much grief as people give them, that's not too bad. Cheesecake Factory. Yeah, it's a public company, actually. Better than expected earnings, store sales up 5.7%. So we are still going to the Cheesecake Factory and enjoying that steak Diane, and that was okay. It was a good earnings report for them. Margins, food industry margins are a big deal there. So if you ever want to look at Cheesecake Factory and wonder if everything's going well, are they making a few bucks? Are their margins a little bit thicker? That's a tough space to be in. And we also know from Tyson the other day, what's going on over there, right? It's tough for these guys in the food business right now, but they've got more people buying. So if that trend continues, that's the question mark. Okay, we can get a few more dollars out of them then. Tapestry, Coach, Kate Spade, the bags that are the same as the other bags, but just cost a lot more because they have a name on it or something. Anyways, they're doing well. You're still spending money there, I guess. They raised their guidance going forward. They don't see any reason why you're going to stop spending money with them. The Coach bags, does anybody? Do they make anything else? Wallets or something? So anyways, good for them. And I'll give you this. The main reason, if you look at the breakdown of their earnings per region, China. China, that really helped. If you take Chinese sales out there, that is not a beat for Tapestry. Lastly, I'm going to not be like that guy on TV with Upstart, and I'm going to say, I don't know why Dillard's is still a thing. Does anybody here shop at Dillard's? Like, is it just our area where Dillard's is like the last place you would think to go? Eric or Kevin, have I messed you up? Are you a Dillard's fan? It's not a Dillard's fan. Like, you know where one is, right? I didn't even know there was one there. As a kid, I used to go into the one at Tyrone Mall, and I just wanted to dress nice. I'd look at the ties and stuff. Never bought a single thing. Just played around with stuff. So I don't know what's going on there. They beat on earnings, sales up. Somebody's going there. I'm not sure. Slight decline in activity overall late in the quarter, so that may bleed into this year. That certainly held them back here today. But I don't. Maybe we're missing something. You know, if you guys tell me you're going to Dillard's, then I'm the one that's out of touch. Maybe. Okay, you want a really cool lesson? You're going to have to wait till tonight, Jazz After Dark. But I'm going to go through, when we say dividends for ETFs, what exactly does that mean? It doesn't mean what you think it does. I'm going to actually go through, we're going to read, I'll break it down for you, but we're going to look at how sometimes dividends are dividends with ETFs, and sometimes they're just non-taxable free money that they give you back. Did you know that? Do you just take you have a high dividend ETF and you're like, oh, yay, it's paying me a dividend. No, that may not be a dividend. I'm going to show you exactly how to figure that out and realize that that return to you may not even be taxable, unlike a stock where you get a dividend and it's taxable one way or the other. There are ETFs that work differently than that, a lot of them actually. So we're going to go over all that fun stuff. And in the meantime, I'll pop this out. Take your questions here. Now, tomorrow, not much in the way of earnings, right? So not too much to worry about there if you're one of those earnings people, getting through the thick of it here. Kirk says, my wife loves that those Coach purses. My wife went through a phase like that when we were way younger. I don't know. I don't really get into that, but it's what it is. A lot of people, so Brent says, I doubt they'll pause for the year. A lot of people think that. This next one is easy to figure out, right? The data right now, and the only other, we won't get any data. Yeah, we won't get any other meaningful data that they use until the Fed meeting, right? We get a jobs number in there. Is that tomorrow? So maybe one more. But other than that, they have the data that they would need to make their decisions. Now they analyze the data, then they all have a meeting somewhere, they talk about it, and Powell comes out and says what he says. That one's easy. After that, I think it's too soon to say anything. What are you laughing at over there?
Yeah, it says Wine and Wealth with Dustin Tungeth at 8 p.m.
What is it?
Or your lower third. I spelled tonight wrong.
Oh, Tongeth. Yeah, you got the wrong word there. You got an ad. Oh, you get an ad. That happens? Do we make a few dollars on that? Probably not. Probably, yeah. Oh, okay. Well, hey. Thanks for your support. I didn't know that. When you said rate hikes and communication services, tech, financial space outperform, what do you think of starting to sell puts in those indexes? Can't tell you to do that, but it is more than a right way to say, well, I would like to take a shot at participating on the long side of a sector that is historically going to do well. Yeah. So I don't have any other way that I can legally answer that one there. I love it. You hope I made it. Oh yeah, there we go. I hope I made $1 too. Can we see that? Do we know how to look at that? Oh, you know how to look. Oh, okay. Somebody's keeping track of that. That's good. Okay. Well, can you hit him with an ad? Let's go. Oh, keep rolling, man. Oh, okay. Wow, we might make a few dollars. By the way, we know how much we make on this, right? It's like $4, right? Yeah, no, I'm pretty sure it's like $4, maybe $8 a day. That's an accurate, I think, number there. So just so you know, like, we're not here for the dollars, because we looked at that one time and we were like, okay, that doesn't seem like a good business move to keep doing that, but I'm here. I'm happy to teach and help you guys out. Hope you learned something. If you did not, I promise you, and this is not clickbait or anything, you will learn something really interesting and geeky tonight, and I will point out exactly how I do the research so you can just do the same thing. You don't have to go hunt around, watch other videos. You'll just be able to go find your answers yourself, and you'll love it. So be a good one tonight. I'll see you in a little bit. And for clients, I'll see you at 8 o'clock. So busy night here for us. You enjoy the rest of your evening. Thanks for watching. Adios. Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.